Hey, it's Zach from Us vs. Herd, coming back today with another video. So what I want to talk about today is the advanced way to form an iron condor. So as you may know, I made a video previously, a couple days ago, about the basics of an iron condor and explaining it a little more simply. So this is the more advanced video. If you would like to learn the basics and would like it simplified, go to my last video and check that out and then come back and listen to this one. Once you've done that, we'll get into this right now, how to form an advanced iron condor. So the easy way to form the iron condor is to just, on Tastyworks at least, is to go to iron condor and it'll put all the wings in for you. It'll put both sides of the wings in for you. And then you can adjust accordingly. However, this isn't the most effective way to form an iron condor, as your goal is for the price to be in the middle of both of your strikes. The best way to get the most out of your iron condor and to get the most profit is to piece it together. So what do I mean by piecing it together? So basically what I mean is when you're reading a graph, so like let's say you're going in a price line, when you're looking at the graph, the best way to make an iron condor is for when it's down, so when it's going down, and let's say it bottoms out at 18.15. So the price bottoms at 18.15. At that point, that is when you would want to sell your puts. So the best way to get the most out of your money, or to get the most credit basically on iron condor, is to piece it together. And since it's comprised of two verticals, so a short put vertical and a short call vertical, the best way is when it's coming down to add the bottom, and the bottom is the short put verticals. So let's say it bottoms out here at 18.15 and you add your bottom. So let's say your bottom is going to be, let's change the expiration. Let's say your bottom is going to be 17.95, 17.90, okay? So you add this for an 82-cent credit. So that's 82 cents part of your iron condor already. The best part about it is since you bought it down here and it goes up, you're going to be up on the puts before anything else. So it keeps going up and up. And let's say you know where the bottom is, right? For learning purposes, the bottom is 18.15. And it keeps going up and up. And let's say the top is somewhere around 18.25. That's when you would add your calls. So you would add the top part. So obviously you wouldn't do it as quick as I did, but the idea is to sell the puts when it's red or when it's on the bottom part. So when it bottoms out completely, that is when you would like to sell your puts rather. When it keeps going up and once it hits the top, that's when you want to sell your calls. And that will give you the most room on the bottom and the top. That way, when you don't expect the price to move anymore, and you know where the top is and you know where the bottom is, then you just essentially formed an iron condor. But you did it a lot differently than just buying or selling the iron condor outright. What you did was piece it together and you made money going up, and then when it comes back down, it protects you from the downside. Now, if you were bearish on a stock, you would do the opposite. You would wait for the top and then you would add the calls first, and if it was going down and once it finds the bottom, you would add the puts next. But since I'm bullish on Priceline, I add the short put vertical first, and then once it goes to the top, I add the short call vertical next. So that's the advanced way to form an iron condor. So why do we do this? We do this because if you buy it outright, then you're not going to get the best pricing. Now, let's say you got the 82-cent credit for the bottom part, and now you want to add the top, so we go to short call. Once again, looks like Tastyworks is glitching. Okay. Let's try a different stock, see if it works on a different stock. Okay, it doesn't. That's what happens when Tastyworks doesn't quite work. But the idea is basically you would want to add the top when you can, and that would protect you from the downside. So once you add the bottom, as the stock goes up, you add the call vertical, the short call vertical, and if the stock goes down, you don't lose that much money because you're not only holding the puts, but you're also holding the calls. And that's when you start to make money, the price goes in. So what I would recommend is, if you're looking to put it on Iron Condor, do not sell it outright. Let's put it into steps. So step one, if you're bullish, for example, on Priceline, you wait for it to bottom out, and once it bottoms out, you sell a short put vertical. And then when it goes up, assuming that it will because you're bullish, as it goes up and reaches the top, step two would be adding your short call vertical. Now, I would highly recommend that you add the top when it's a few days before expiration or even 1 day before expiration. So if you can hold the bottom at 18.15 and you can allow it to keep going up and up, and if it keeps going up, or if it just kind of bottoms out and stays in the middle and trades sideways, then I would recommend waiting until the day before expiration to adding the top part. Why is this? Because Iron Condors primarily are for making money on theta decay. And when is theta highest? The day before expiration or the day of expiration. So I highly recommend adding the last piece of it the right before expiration, because that's when you're going to get the most for your money and you're going to make the most on theta. This is the most proper way to do an Iron Condor in my book, because not only does it give you the flexibility to get higher credit, so like let's say you got 80 cents on the last one, so we had like 1795, 1800, and you had it for like $1. That allows you to get a higher credit if you piece the Iron Condor separately. But it also gives you the freedom to do something, basically you roll for a profit. So let's say that you added call or puts on the bottom, right? And it goes up and up and up and up. And then you add a top, right? What you can do though instead is, if it keeps going up, you can if it keeps going up, you can get rid of the bottom piece for profit, and then you can get a higher strike price. So let's say you bought the 1795, 1800, okay? And then it went up and you added the top, okay? And after that, it kept going up. So then you started making profit on the bottom part, like a lot of profit. You were up to like 50% profit. What you can do is sell the bottom piece, keep the top part, and then what you can do is you can move it up even closer. So let's say you took this for $1 credit and it went up, and you sold it for 50 cents, you made $50 on that trade. And then what you're going to do is go up more, and then you can buy it for another credit, and then you can keep that as a piece of your Iron Condor. So what you essentially did was, okay, the bottom part is at 50% profit. So you take it off the table, and then you go and you add a strike price that's closer to the money, and then you double dip the Iron Condor essentially, meaning you take profit on one end, move it, you roll the profit up to a higher strike price, and then you let it expire worthless, or the next day, or you collect theta decay on it and you make even more money on it. So you made money the day before on it because of one side, and then it keeps going up and you add another strike price higher or closer to the money, and then you make money the next day on theta decay. Also, you could do this with calls. If you're bearish and if it was going down, and you had a top position, you can sell the top position for profit and then re-add the top position at a lower strike price. That way you can make money on it again on the theta decay. So again, the best way to do an Iron Condor, an advanced Iron Condor strategy, is not to sell it outright. It's to add the bottom or the top first, depending on which direction. So for step one, goes down, you add the short put vertical, and then if it goes up and up and it reaches the top, you add the short call vertical, and that way you make money. You made money on the put side going up, and then you make money on the call side going down, but you did it when it was on its low and it's on its high. Now this strategy is most properly done if you complete the Iron Condor a day before expiration, but you can add one side whenever you like, and then add the second side if you would if you want to collect theta decay the day before expiration. So that's just an outlook on advanced iron condor and how you can make more profits on one position and how you can do it. Basically, it's an advanced strategy for iron condors and how you would be able to piece them together. And that is, like I said, it's an advanced strategy. So if you're new to trading, I would say go back to my old video and watch that first. If you're not, then I would say that this one is probably good for you if you're not a beginner. And if you're looking to get more money out of your iron condors and how to make that the most use out of your position. So if you guys like the video, like it, subscribe, and comment, ask questions. We will answer your questions as much as we can. So this is one of my favorite strategies. I know someone asked about what strategies we like, and this is one of my favorites, piecing together iron condors and double dipping them for extra profit. So remember, it's always us versus herd, so join us. We'll see you guys next time.